Critical Man Pictures presents the Forex video training series. Orange Belt, Intermediate Fibonacci. Like we said earlier, the Fibonacci tool is extremely useful, but it shouldn't be used all by its lonesome self. The Fibonacci tool should be used in combination with other tools. In this section, let's take a look at what you've learned so far and try to combine it to help us spot some great trade setups. One of the best ways to use the Fibonacci tool is to support potential support and resistance levels and see if they line up with Fibonacci retracement levels. If Fib levels are already support and resistance levels, and you combine them with other price areas that a lot of traders are watching, then the chances of price bouncing from those areas are much higher. As you can see, the dollar Swissy has been on an uptrend recently. Look at all those green candles. You decide you want to get on this long trend. But the question is, where do you enter? You bust out your Fibonacci tool using the swing low on November 26th and the swing high on February 19th. Now that we have a framework to increase our probability of finding a solid entry, we can answer the question of where should you enter. You look back a little bit and you see the 1.0500 price was good resistance, and it just so happens to line up with the 382 Fibonacci level. Now that it's broken, it could possibly turn into support and be a good place to buy. If you did set up an order to buy at the 382 Fibonacci level, you would have been a pretty happy camper. There would have been some tense moments, especially on the second test of the support level on April 14th. Price tried to pierce through the support level, but failed to close below it. Eventually, the pair broke past the swing high and resumed its uptrend. You can do the same in a downtrend as well. The point is, you should look for price levels that seem to have been areas of interest in the past. If you think about it, there's a higher chance that price will bounce from those levels. Why? First, as we discussed earlier, previous support and resistance levels would be good areas to buy or sell because other traders will be eyeing those levels like a hawk. Second, since we know a lot of traders also use the Fibonacci tool, they may be looking to jump in on those Fib levels themselves. With traders looking at the same support and resistance levels, at least you can be more confident about your trade. After all, there is strength in numbers. Remember that trading is all about probabilities. If you stick to those higher probability trades, there's a better chance of coming out ahead in the long run. Another tool to combine with the Fibonacci tool is trend line analysis. After all, Fibonacci levels work best when the market is trending, so this makes a lot of sense. Remember that whenever a pair is in a downtrend or uptrend, traders use Fibonacci retracement levels as a way to get in on the trend. So why not look for levels where Fib levels line smack with the trend? Here is a daily chart of Aussie yen. As you can see, the price has been respecting the rising trend line at about March 12th. You think to yourself, that's a good uptrend right there. I want to buy the Aussie yen, even if it's just for a short-term trade. I think I'll buy once the pair hits the trend line again. Before you do that, why don't you reach for your Forex toolbox and get out that Fibonacci tool. Let's see if we can find a more exact entry price. Here we plotted the Fibonacci retracement levels by using the swing low at 55.34 and swing high at 73.32. Notice how the Fibonacci levels are intersected by the rising trend line. Could these levels serve as potential support levels? There's only one way to find out. Guess what? The 38.2% Fibonacci level held, as price bounced there before heading back upwards. If you had set some orders at that level, you'd have had a perfect entry. As you can see, it does pay to make use of the Fibonacci tool, even if you're planning to enter on a retest of the trend line anyway. The combination of both a diagonal and horizontal support and resistance level could mean that other traders are eyeing those levels as well. Take note though, as with other drawing tools, drawing lines can get pretty subjective. You don't know exactly how other traders are drawing their lines, but you can count on one thing, that there's a trend. If you see that a trend is developing, you should be looking for ways to give you a better chance of a profitable trade. you can use the Fibonacci tool to help you find entry points. If you've been paying attention, you know that you can now combine the Fibonacci tool with support and resistance and trend lines to create a simple but wonderful trading strategy. You can also create great trading opportunities by combining Fibonacci with Japanese candlesticks. In combining the Fibonacci tool with candlestick patterns, we are actually looking for exhaustive candlesticks. If you can tell when buying or selling pressure is exhausted, it can give you a clue of when price may continue trending. The pair seems to have been trending down, looking at the daily chart, for about 2 weeks, but seems to have paused a bit. Will there be a chance to get in on this downtrend? You know what this means. It's time to take out the Fibonacci tool. As you can see, the swing high was set on December 3rd, and the swing low was set on December 21st. Looking at the charts, you notice a tri-star pattern on January 12th, 13th, and 14th. Remember, the tri-star is 3 doji candles that indicate indecision. You also spot that the upper shadows of these candles is touching the 38.2% Fibonacci level. Is it time to short the pattern? You can never know for sure, which is why risk management is so important. But the probability of reversal looks pretty good. If you shorted when you saw the tri-star candle pattern meeting the 38.2% Fibonacci level, you would have been very profitable, making yourself 1,000 pips in 5 weeks. It seems that buyers were indeed pretty tired, which allowed sellers to jump back in and take control. Eventually, price went all the way back down to the 1.3500 level. Combining Fibonacci with Japanese candlesticks can be very useful, and they signal whether a fib level is likely to hold. If it seems the price is stalling on a fib level, chances are that other traders may have put in some orders at those levels. This would act as more confirmation that there is indeed some resistance or support at that price. Another nice thing about Fibonacci with candlesticks is that you don't need to place limit orders at those fib levels. You may have some concerns whether the support and resistance levels will hold, since we are looking at a zone and not necessarily specific levels. This is where you can use your knowledge of candlestick formations. You could wait for a candle to form right at a fib level to give you more confirmation whether you should put a price in on that order. If a candlestick forms at a fib level, you can just enter a trade at market price, since you now have more confirmation that the current level could be holding.